Hello, I'm Ken Moraif, Senior Advisor at Retirement Planners of America, and this is our weekly market update. So the week just ended, the S&P 500 index was down, and primarily on the back of three worries. One is, of course, the trade talks with China and Europe and all the stuff that's going on with that. But to make things a little bit more exciting, we also had the tanker that was attacked, and the United States is saying that Iran did it, and Iran's saying, no, we didn't. And one thing that it did do was it caused the price of oil to spike, and we'll talk about that in just a second. And then also the Federal Reserve. As we've described in the past, the Federal Reserve follows from the front. And the bond market right now is asking, if not telling, the Federal Reserve to lower interest rates. And so we'll see where that goes. But if we were to bet, we would say that the Fed will probably lower interest rates. So let's talk about China and Europe first. Those negotiations continue to be ongoing. There doesn't seem to be any advancement nor any deterioration in the talks. And for the time being, we consider that to be a good thing. We do believe that there's pressure on both sides, both President Trump heading into the election year. He would like to have the China negotiations behind him. And the Chinese, it is hurting their economy, even though they could stand a lot more pain, most likely. But it is hurting their economy. Their growth has slowed, and they have a lot of people that they need to keep employed, or they could have social unrest. They have a large amount of debt. If their economy is slowing down, that could be very detrimental for them. And so both sides have a vested interest in making the negotiations come out positively, or at least resolved. And so because of that reason, we believe that that's what's going to happen. And when it does, then we'll look back at the fundamentals of the economy. And for the time being, the fundamentals seem to be quite strong. Consumer confidence is good. Jobs are at highs we haven't seen in 50 years. The unemployment rate, wages are rising. So a lot of positive news with regard to the economy should, once those uncertainties are removed, cause the market to reach all-time highs. So we're bullish on that. The Iran situation, same thing there. It is our belief that Iran did, in fact, do this, and it is to drive oil prices up because they need the revenue. That would seem to me, to us, to be a logical motivation behind that happening. It's a risky move because it could cause war with the United States. So that's the opposite point of view, is that it would be very foolish for them to engage in that. So we'll see where it goes, but we don't see this as being a major risk to the market. The last item that I mentioned is the Federal Reserve. And the Federal Reserve is like the front dog in the fox hunt. That dog is in the front and is the supposed leader of the pack, but it's always looking behind its shoulder to see where the pack is going. If the pack goes that way, then it runs and gets in front of the pack. So it basically leads, or rather follows from the front. And the Federal Reserve tends to be that way as well. If the bond market demands lower interest rates, the Federal Reserve eventually usually acquiesces. And we believe that that'll be the case. So later on this year, we anticipate a rate reduction. And should that happen, the stock market, the S&P, the Dow should react positively to that. So for a variety of reasons, we continue to be bullish, and we believe we should be invested at this time, and that's where we sit. However, it is always very important to be diversified, in our opinion. It is also very important to always have a sell strategy, a protect what you built strategy. And we have that, buy, hold, and sell. As you know, we counseled our clients to sell in November of 2007, before 2008, when the credit crisis fully bloomed and created the stock market crash that we saw that ensued. So if you are retired or retiring soon, we believe you should be diversified, only take as much risk as is necessary to accomplish your goals. And then secondly, have a protection strategy to protect what you spent the last 20 or 30 years accumulating so that you could retire. You don't want to lose that in a short period of time and cause yourself not to be able to retire or to have to unretire if you can. So for all those reasons, I invite you to take advantage of the resources we have available to you. You can meet with one of our retirement planners. You can attend our seminars. You can watch our videos, podcasts, as well as our webinar. And we would love the opportunity to meet with you and see if we can help you to build your retirement plan. So thank you for watching this video, and we will talk soon.